Baby, you know that we're living in the twilight zone the same day that Jim Cramer's coming out saying, hey guys, Nvidia, the AI giant, it's not near its peak yet. You know, we should always be concerned when Nvidia or when Jim Cramer's bullish on something. And I've been watching people short Nvidia after hours.
Did you close your short position? No. I have 10 shares short.
Now, if you want to be a degenerate gambler like the people on Reddit, bet it all on shorting Nvidia because you're going to lose your shirt. It's almost a guarantee. Now, I know these people aren't, betting against Nvidia or shorting with any substantial amount of money. They're not Michael Burry, of course, but still, Nvidia peaked its all-time high in after hours before pulling back. Now, this video is being made before earnings, the earnings call. So the guidance could change. The earnings call could change the mood. But I mean, we peaked I think the peak was $739. We went above that. We went over $740 on the earnings release, and now it's pulling back. We're sitting up about 4%, and it's rallying the troops, taking the whole market up with it. I mean, the S&P hit a decent high here, and all the AI stocks and big tech companies are rallying. We'll see if it lasts. Now, in tandem to this, as we're going to break down these earnings, we should also talk about Rivian crashing after hours, Lucid crashing after hours on its earnings as I'm continuing to invest and buy Tesla shares. So we'll talk about that in tandem. But if this is a conversation you'd appreciate, hit that like button. Now, why do I think there's a bubble in the AI space, especially with these chip makers? Well, I mean, you look at something as parabolic as super microcomputers rallying up like just hundreds of percent. Analysts, which are worse than weathermen and, basically con artists coming out every day, changing the price target from 800 to 1200 to 1300, literally just before it crashes 30%. But thanks to Nvidia's earnings, it's rallying after hours again, jumping up, 5-10%. Again, we'll see if it can hold. We may be in overbought territory at this point. I'm not a technical trader. I'm not playing this insanity. But what I'm looking at is the fundamentals of the business and trying to get a feel out for when the brick wall is going to hit, because the sad reality is these growth rates are truly unsustainable at scale. And it all has to do with data centers, which we'll rope back around to data centers in a second. But look at the recordly quarterly revenue of $22.1 billion, up 22% just since last quarter and 265% from a year ago. I mean, you look at the insanity. So from Q4 2023, they did $6 billion. This quarter, look at this. This quarter, what is this? A year later, $22 billion. Damn, like I want to throw up reading these numbers with 76% margins. Gross margins on a product sale at 76% means for every $100 they bring in out of revenue, they're making $76, which is up from 63% this time last year, which is just jaw-dropping, right? So total net income is $12.2 billion. The company is trading at quite a hefty premium as it stands today to be bringing in this kind of net income, because when you're comparing it to the likes of Google or Apple, I mean, it's trading above Google. I think the market cap now is well above Google's, right, at 1.6, 1.7 trillion. What's Google's market cap at today? Probably somewhere, I think, of 1.78. So it's been hovering around there, but I know it did crack Google's market cap. But you got to remember, Google's doing like 18, 20 billion plus of net income, on a quarter. So it needs to basically add another 70, 80% of net income to start matching these mega giants. So it has to keep this growth rate up. But my God, from 57 cents to almost $5 in diluted earnings. I mean, could you see, there's no growth on the planet that has ever looked like this at this scale. Like, it is quite staggering to see the AI revolution, and we see that in their data centers. And the data centers is something that only recently woke up, and we can see that because their data center revenue basically through 2023 was marginally flat. Like it was unchanged until the AI, ChatGPT, and they understood large language models and what it takes to build out these wickedly interesting, valuable tools. And that's when all of a sudden every big business from Amazon to Meta and Tesla and their grandmother realized they need a lot of these H100 chips that cost $50,000. And that's been driving this growth. So we know there's one pivotal thing that is dictating NVIDIA's entire future, and that is big business, big tech companies buying H100s, H200 chips, because you look at gaming, and gaming growth is moderate. It's very nice. It's nothing crazy by any metric, 2.8 billion. It's nice. You look at professional visualization. This is growing at a nice clip, but we're not talking about billions of dollars. Auto growing at a nice clip, but not billions. OEMs and others, like almost flat, if anything, year over year. Like there's only one business for NVIDIA today, data centers. Now, the biggest fear here is you only need to build the data center once. You're not going to be upgrading like you are a MacBook or an iPhone every year to go from an H100 to an H200. When these companies reach their fulfillment of the what the requirements are to start these data centers, they're not going to be buying these chips at the same level that we're seeing right now, right? So the question is NVIDIA can't not only is this growth rate completely unsustainable, when it reaches parity with the market demand and the growth starts to slow off, you better hope that Nvidia at least doubles up one more time to justify the absolutely absurd, PE multiple it has on it, because no stock can sustain 100 times multiple at this scale and keep up this kind of growth. Right now, it is astounding, and I am congratulating everyone that managed to catch on to this trend and buy into it. And just, man, what it's kind of just reminds me of the Tesla bull run. I mean, you go back to 2020, 2021, the SPAC bull run. Like, there's so many bull runs, and this is the next bull run. But like all of them prior, it is unsustainable. And at the end of the day, as I mentioned, I would always rather own the companies that are building out the data centers, that are building out the tools and the solutions that the end user like me are going to use, than own the chip maker. Because at the end of the day, the miners that were selling, the picks to the miners that were getting the gold, at the end of the day, the miner can only sell so many picks. The gold guy that's mining with those picks, he's obviously taking on a lot of risk, and the pick guy is always going to make some money, but eventually they're not going to need any more picks, right? Eventually they're going to reach parity for what they're mining. And that's probably not the best analogy, but at the end of the day, I think these tools are going to bleed into so much revenue for the mega giants like Microsoft over time. And when Microsoft's trading at a 30 times multiple, I'd take that any day over this kind of growth rate with Nvidia, because eventually you're going to have to take profit on this, because Nvidia doing 18 billion and maybe it goes up to 20, 25, but eventually it'll peak and it's going to start slowing down. And I'm super worried when that day comes. Now, I could be wrong, and I'd love to know what you think in that comment section below. But in contrast, I have been buying more Tesla stock, a company that is largely overvalued today as well, in the anticipation that I think people are largely under-recognizing the calamity that is going on with the rest of the EV market. I mean, Lucid posted numbers, and this company's headed for bankruptcy. When you take a look at these numbers, their deliveries of 1,734 vehicles in Q4 and 6,000 vehicles basically in the entirety of 2023 is up 37% compared to the full year of 2022. This company is not growing anywhere near close to the clip of Tesla still is. But when you take a look at the balance sheet, they're going to be running out of money here soon, right? Like, the total assets sitting at 8.5 billion is great. But they're now down to about 1.3 billion in cash and cash equivalents. They've been making some short-term investments by the look of it. But when you look at the burn rate here, I mean, firstly, again, they've got about 3.6 billion in total liabilities. So their balance sheet's still in a relatively good place. But when you're burning through, you take a look at the net loss here of $653 million for that 3-month ending, and the total of 2.8 billion for the entirety, basically, of the 12 months of 2023, and their revenue is slowing down. Like Tesla's still actually being able to beat revenue numbers because of the scope and the scale of their deliveries. But when you're having to cut costs and you're having a hard time in this higher interest rated market, I mean, these revenue numbers are looking abysmal. Again, when you take a look at the total costs and expenses, I mean, this company it is going to be a long run for a company like Lucid. Now, Rivian, I think, has perhaps a better standpoint. Lucid trading at 8.4 billion. We got Rivian here trading at about 14 billion. Rivian, I kind of like their vehicles. I like their trucks. I see what they're doing, and I think there's some good future for it. I'm still waiting for the 10Q because they haven't really given us a whole lot of insight here, but they announced the total, for the full year ending, basically the company produced 17,541 vehicles in manufacturing facility in Illinois, delivering about 13,972. Like, their deliveries seem to be much, much higher. The company produced 57,000 vehicles, delivered about 50,000 of those. So they're kind of coming in with their guidance, which is great because the company's still getting just slammered here. I mean, you take a look at their net loss for the 12-month ending is about 5.4 billion. Their adjusted EBITDA, basically after some depreciation and amortization costs, about $3.9 billion. So unlike, just Tesla's the only real profitable EV company outside of perhaps BYD, right? And everyone's like, oh, BYD is going to come for their lunch. Somebody's going to come out for their lunch. Of course, this is a huge evolving industry, right? I'm just shocked at how many players there are in the EV space that's just struggling. And we're talking about just pure EV players. Tesla is a full-on, AI and kind of robotics player in the realm of speculation still, but they're growing all these other aspects of their business. Charging, the battery walls that they just upgraded that are even more efficient now than ever. Solar, and people just keep crapping on it, and it makes me really want to keep buying the stock because I think they're going to head into another growth rate once we kind of get through some of the calamity with the market and the higher interest rates. It's just one of those stocks, right? So we'll see what happens. I could be wrong as well, but I'd love to know what you think about this entire conversation down in the comment section below.